We were over on the Seeking Alfalfa website, saw this, thought I'd share it. Tesla price cuts are a clear signal of leadership, not competition. Summary of this article. I argue investors likely misinterpret Tesla management's rationale behind cutting prices. Tesla's aggressive price cuts are likely not a reflection of a short-term tactical response to increase competition, but rather a signal of the EV maker's long-term strategy to reach 20 million vehicles produced per year in 2030, which we all know, Tesla's price cuts are supported by cost leadership, anchored industrial scale, and sophistication in producing EVs. On the backdrop of the assumption that selling 20 million EVs by 2030 is reasonable, trigger alert, some people are going to get mad because it is reasonable and many people don't think it is. I value Tesla shares at $310.61. See, I like this. A price target that actually looks like it came out of something rather than somebody's asshole, but a spreadsheet. If you ever see something that's beautifully rounded, it's a nice round number, and it's a price target, you're clearly hearing from somebody who either has introduced a slight fudge factor, just to make a nice clean number, or they're literally pulling them out of their ass. Just a pro tip. Earlier this year, Tesla's decision to cut prices for the Model 3 and Y caused Tesla stock to fall sharply, with Tesla shares intermittently trading down to nearly $100 per share. I'm never going to stop laughing at the dumb motherfuckers who sold around that level. Seriously. If that was you, you've learned a lesson. You're not fit to invest. Don't even try. And I wish I didn't mean that, but I do mean that. There's just some red flags. You learn a lesson about yourself, your temperament, your abilities. You fuck up that bad, you've learned a lesson about yourself. It's like if you drive a vehicle and within a week of driving a car, you've killed somebody in a fatal accident. You should probably never drive a fucking vehicle again because you're a danger to yourself and others. I don't want to be a downer, but some people just are not cut out for investing, and the folks that sold Tesla near $100 per share are among them. Now, although Tesla stock has somewhat recovered, the EV maker's valuation is still about 55% below all-time highs, as concerns about competition and price cuts continue to pressure investor sentiment. And that said, investors likely misinterpret Tesla management's rationale behind cutting prices. In my opinion, Tesla's aggressive price cuts are likely not a reflection of a short-term tactical response to increased competition, but rather a signal of the EV maker's long-term strategic ambition to capture an enormous market share in the next generation of mobility. In other words, on the backdrop of cost leadership, Tesla is preparing to bring electric mobility to the mass market. If in the process Tesla can take out some competitors, all the better. Now, I just want to jump in here, folks. I'm not privy to say how or exactly what I know, but I have very good reasons to believe that Tesla's most recent round of price cuts were not necessary. They were voluntary. I'll leave you guys to read between the lines. I can't say any more than that. Price cuts signal leadership. Given the comparably low production number of electric vehicles, as well as the high R&D costs to build and improve the relatively new technology, EVs have long been considered too expensive to produce for and to sell to the mass market. Now, this is true. This has been an error in thinking and reasoning. Actually, there hasn't been any thinking and reasoning, because if the thinking and reasoning took place, people would think and reason, hang on, battery costs are coming down predictably and precipitously over time. They're the most expensive thing in the vehicle. The cost to produce the vehicles is also plummeting because it's a new technology. There's a lot of innovation still happening in the manufacturing. Oh, and then there's economies of scale. The more of these things people make and the scale's going up, the more costs come down overall. There's fixed costs that stay the same, etc. In other words, the price of these things is going to keep coming down over time, all fucking decade and into next decade as well, meaningfully. Meaning obviously at some point in the not too distant future, within a few years, it'll be much cheaper to buy a comparable EV than an ICE vehicle, and it's way cheaper already to own and operate. Therefore, any consumers buying an ICE vehicle in the second half of this decade will need to be, well, I guess I'll just say that the bell curve is real. I mean, it's a pretty straightforward thesis here. And again, something a lot of people just didn't think about and didn't consider. Spouting off saying, oh no, there's no demand, they're too expensive, without doing the thinking. It's always wise to think first and speak second. A lesson I'm still sometimes trying to learn myself. But the situation has changed. After years of expanding production, Tesla has now captured enough industrial scale and sophistication in producing EVs to profitably sell at prices that are almost competitive with gasoline-powered cars. Exactly. That's today. A couple of years from now, these vehicles will be significantly cheaper than comparable ICE vehicles. Then it is literally game fucking over. And likely as a consequence, Tesla has decided to pass down value unlocked through cost efficiency to customers. Again, it's in their master plan. Drive the cost down, pass on those savings, more people can buy Teslas. Next minute, we've transitioned the entire world, at least transportation, to sustainable energy. Tesla is known for having high profit margins and operating efficiency. For the trailing 12 months, the EV maker has managed to claim an EBITDA margin of 21%, which is nearly 90% above the sector median. In other words, about double. Similarly, Tesla's net income margin is 15.4%, a 236% premium to the sector median, respectively, more than a triple. Sometimes people get confused with numbers, but just so you know, 100% is double. 200% triple. With regards to capital efficiency, Tesla enjoys a return on total assets of approximately 15.3% as compared to 4% for the sector median. Now this is kind of insane. If there's any number nerds here, grab the Kleenex or whatever. I didn't say that. Feel free to pause this one. But we all know Tesla's printing money and doing so far more efficiently and profitably than any other, quote, automaker on the planet, and it's not even close. 2 to 3 times more profitable depending on metric. And they're still a tiny little company, remember? Currently at about 2 million annualized rate of production per year, they're going to 10x throughout the next decade. Will their profits 10x? In absolute terms, probably. Tesla's still a tiny little baby company compared to what it will be in the future. And they're already significantly more profitable than any other, quote, automaker on earth. Needless to say, these are some quite amazing profitability numbers relative to the industry. But according to commentary from Tesla's head of production, Tom Zhu, there might still be loads of untapped potential to capitalize on opportunities to further improve the cost effectiveness of electric vehicles. Well, duh. In fact, anchored on the development of a new vehicle manufacturing platform dubbed the New Generation Vehicle, Tesla aims to reduce the firm's manufacturing footprint by 40% and lower the manufacturing cost per EV unit by as much as 50%, which is what Tesla unveiled at Investor Day 2023. Stunningly, a lot of people still haven't quite figured out what this means, especially for Tesla's future delivery growth. Reflecting on Tesla's strong profitability and the outlook for future profitability expansion, the decision to cut prices seems like a reasonable strategic offensive to leverage the company's cost leadership into capturing a larger SAM. What does that even mean? Does anyone know what SAM means? Let's find out. If anyone's wondering, SAM apparently means serviceable addressable market, the portion of the total addressable market that the company's products are suitable for. Targeting a larger SAM. According to Doomberg Unintelligence, I think I pronounced that right, the market for light-duty EVs could potentially be as large as 60 million units by 2040, an enormous market potential. But of course, it is unlikely that Tesla will be able to claim the lion's share of this market without servicing the mass market. This is what the price cuts are for. So what we're looking at here, these are the Doomberg estimates for EV market size in the light-duty segment, all the way out till 2040. Now, I hate to rain on their parade. There's a very large margin of error here. I really don't know what planet Doomberg are on here, but they have around 60 million light electric vehicles being sold in 2040. My question, dear Bloomberg, other than how high are you and please can I have some, how in flying fuck can you morons justify anyone on earth still buying an ICE vehicle, a light duty ICE vehicle beyond 2030? This is insane. These clowns have a mere give or take about 40 million light electric vehicles being sold in 2030. What are the other 30 plus million going to be, Bloomberg? Because they ain't going to be ICE vehicles or hybrids or hydrogen vehicles. They're either not going to be sold or they'll be electric. I just really want to underscore the embarrassing timeline here. It's not until 2040 where these Muppets have light electric vehicles making up almost the entire new vehicle market at around 60 million. There's still a gap of about 10 million. What's going on, Doomberg? Oh, that's right. They're relying on these so-called experts instead of their own cognitive faculties. But the timing on this, they're way off. We go back. Tesla's just unveiled plans to halve the cost of their already extremely compelling, highly profitable electric vehicles. They're not going to need to sell these vehicles for half price to sell tens of millions of them every single year. And they're aiming to be producing at least 20 million of those by 2030. And if Tesla could be producing 30 million or 40 million, guess what? They would sell them. I know people are going to get triggered and mad when I say that. What are you talking about, bro? That's never happened before. Don't reason by analogy. This is another IQ test. If you understand half-price compelling electric vehicle, but you don't understand that Tesla could theoretically, if they were already making them, be selling 20, 30, 40 million of those things every single year, you got rocks in your head. That doesn't mean they will sell, because remember, if other companies can produce relatively compelling vehicles and sell them at comparable prices, even if they're making almost no money on them versus Tesla's industry-leading margins, then Tesla won't need to sell 30, 40 million of these things a year. But they could, that's the point. At that price point, somebody's going to be selling them. Tesla's going to be making the lion's share, but there'll be many other companies as well. In my opinion, Tesla's price cuts are an early signal that Elon Musk's car company is prepared to lead the market for more accessibility. In my opinion, Tesla's price cuts are an early signal that Elon Musk's car company is prepared to lead the market for more accessibly priced EVs. With that frame of reference, I would like to point out what Tesla's head of production, Tom Zhu, said during Tesla's recent Investor Day. As long as you offer a product with value at an affordable price, you don't have to worry about demand. Shout out to the adults on Wall Street who still have not figured this out.
Oh, where's your demand analysis? I don't understand how a half-price compelling electric vehicle could sell lots.
We try everything to cut costs and pass down that value to our customers. And until Tesla launches its mass market accessible Model 2, or even to be priced at $25,000 to $30,000, discounting existing models is a reasonable lever to start targeting said market opportunity. And it's a fair point. For the record, my assumption is that throughout this decade, Tesla's cost to produce the Model 3 and Y will fall to such a point where their base price, sale price, will be around $35,000 in tomorrow's dollars. If they'll need to sell it that cheap, I don't know for sure. But my suspicion is that they will continue to drive the cost of the 3 and Y down as much as possible while simultaneously ramping up production of the much more affordable next-gen vehicle. The point? Don't expect the average selling price or the base price of the Model 3 and the Model Y to stay where they are throughout the decade. The trend will be down. The trend will be down on all the prices for all of the vehicle models they have. But again, this will have to be dynamically adjusted based on production, demand, order backlog, and so on. They don't want wait times to get too ridiculous. Thus, Tesla's lower prices are likely to be structural rather than temporary, supporting Tesla's ambition to sell about 20 million electric vehicles per year by 2030. While Tesla's new pricing strategy might have some unfavorable short-term effects on margins and net profitability, on a long-term perspective, the strategy will very likely amplify scale and network effects. Absolutely right, and very important. And unlock a large commercial base for cross-selling post-purchase services, for example, charging, insurance, and software. Now, there's a very important thing here that we need to discuss. Network effects and a large install base, I would call it. As Tesla's FSD software improves in capability, more people are going to choose that option, including people who've already bought a Tesla, who didn't want it or couldn't afford it initially, who've now saved or seen its capabilities and decided, all right, it's time. Almost pure profit straight to the bottom line. In addition, he's right, charging, insurance, other software as well, all an effect of Tesla's total install base. How many active users own a Tesla vehicle on roads? Now it's around 3.5 million. Soon it'll be 4.5, 5. And there will come a time, within about a decade, probably a little bit less than that, where Tesla's global fleet will exceed 100 million units. Yeah, 100 million active users. If you want to blow your mind, do some numbers. What if 100 million people on average spend $100 in a year? Or what about $50 per month? Do some numbers. You'll be surprised. Oh, and then there's the whole data collection advantage. The more vehicles Tesla has on roads covered in sensors collecting data, the faster they train and improve their FSD software, and the more they extend their already unassailable data lead. Long story short, it is in Tesla's best interest, and the best interest of their mission, to get as many vehicles on roads as soon as possible. If they had to, they could sell them for no margin at all. Now, they won't need to, but if they had to, they'd still do it, and it would still make sense because they'd recoup all of that money back and then some through future software revenue and extending their already unassailable lead in terms of autonomy. Valuation offers upside. Reflecting on Tesla's serviceable, addressable market expansion, I view the company's 2030 ambition to sell 20 million cars per year as reasonable. To account for the volume expansion, however, I lower my average sales price per Tesla car to $52,000 and my net profit margin assumption to 10.5%, pricing headwinds only partially offset by economies of scale. Yeah, I'm going to say massively off the mark on this average selling price, bro. This is a massive mistake I think a lot of people are making. I mean, a colossal mistake. I'm assuming this is a 2030 ASP. If you think Tesla's ASP in 2030 is going to be over $50,000, you have rocks in your head. It's going to be closer to 30. Why? Geez, how do they sell 20 million vehicles per year? They do so at a much lower purchase price. Should go without saying, apparently it doesn't. And it's interesting. You see any Tesla bulls out there who, let's say just hypothetically, maybe they think Tesla might sell about 10 million electric vehicles per year. Ask them, well, hang on, your average selling price seems rather high. What if the average selling price was $30,000? You think they might sell more vehicles then? They'll come back and say, oh, well, if they did that, their margins would be really bad. But then you ask the question, but aren't the battery prices coming down? Didn't Tesla just unveil plans to halve the cost of a compelling electric vehicle? Therefore, they could maintain comparable margins to today and still be selling vehicles for around 30 grand? Oh, I didn't think about that. And what is your expectation for how many EVs will be sold versus ICE vehicles in 2030? Oh, well, I think it's about 60% of the total market will be EVs. What if it was 100%? Would that change your estimate as well? These are good questions to ask. So again, one of the biggest mistakes people are making, two of the biggest mistakes people are making, smart people, ASP for Tesla vehicles in 2030, way too high, and massively underestimating what percent of all vehicles sold will be electric in 2030. It's going to be close to 100%, give or take. Worst case, it's 80. Best case, closer to 100. But the point is that 80% mark is really where it counts. that's when the disruption will have fully taken place. It's going to be a very long tail going from 80 to 82 to 85 to 90 and so on. But I just wanted to point out some of the massive mistakes a lot of people are making. I continue to assume that for every dollar of hardware sales, Tesla will be able to sell 20 cents of post-purchase revenue, including energy services, software solutions, and insurance. For reference, Apple generates about 30 cents worth of services for every dollar of hardware sales. For Tesla's software business, I continue to view a 35% net profit margin as reasonable. I would suggest that it's going to be significantly above that point, just saying. Based on this, I now calculate a $140 billion annual economic profit with a present value equal to $966 billion. This number discounted back to early 2023, assuming a 11% weighted average cost of capital and adding $16.42 billion of net cash, gives an equity value of $983 billion or $310.61 per share. If you nerds want to pause and see all the assumptions, go for it. Turns out that $52,500 ASP was for 2030. Another table if you nerds want to pause this, check it out as well. Conclusion. There's a gap in the market for $25,000 electric vehicles. No shit, Sherlock. And Tesla enjoys the cost leadership to fill it. Conceptually speaking, the EV narrative has so far evolved in 4 stages. First, an early promise is enough to excite investors. Reference Nikola, bro. Let's just rephrase that. An early promise, unsubstantiated, with lots of red flags surrounding it, is enough to excite dumbasses who think they are investors, but they are not. I'm sorry, not sorry, but everyone who owned Nikola stock was either gambling or a moron who thought they were investing. There was nobody who was actually an investor who bought Nikola stock. 0 people. One of those lessons, like I said earlier, if you sold Tesla stock near $100, you've learned you're a moron. You should probably stay away from investing because you're incapable, incompetent, and dangerous. The same is true if you bought Nikola stock and thought you were investing in Nikola stock. To get fooled by clear fraud, total con man, red flags for days. I made 35 videos calling out this fraud of a company, the fraudulent claims, the stock pumps, the fake truck to lure in dumb retail investors, etc. If you still somehow got fooled, you've learned a lesson. You're probably not cut out for investing. Sorry. Second, EV companies needed to prove that they actually have a technology and product, e.g. Lucid. Third, companies rushed to test if their technology and product could be commercialized in a sustainable business model. Now we are in the 4th phase, which requires companies to build at industrial scale and cost efficiently. And like for phase 1, 2, and 3, Tesla is leading the way. Personally, I view Tesla's 2030 ambition to sell 20 million cars per year as reasonable. The market size is the enabler, and Tesla's cost leadership is the lever. Anchored on that assumption, I value Tesla shares at $310.61. I enjoyed going through this article. It's always good to hear people's opinions, and I think the author of this article, generally speaking, is on point. Tesla will continue to drive their costs down and pass on those savings to consumers. The trend on their vehicle prices over time will continue down, and Tesla will continue to cut prices, not because they must, but because they can. And while we're on the topic of because they can, guess who can't? Tesla's so-called competition. If you do the math on that, if Tesla can keep cutting prices sustainably, and Tesla's competition can't keep cutting prices to follow suit, who wins? In fact, here's a better question. Who survives? Period. If anyone. And as I mentioned earlier, one of the biggest things most people are getting wrong about Tesla, including the bulls and the bears, are the average selling prices of Tesla vehicles in the future. The way they get to 20 million vehicles sold in a single year by the end of this decade is not at a $50,000 plus average selling price. It's going to be closer to 30 in today's dollars. Bit of inflation, maybe around 35. And as I've been saying for years, there will be a subsequent generation vehicle after Tesla's half-price $25,000 vehicle effectively unveiled at Investor Day 2023. Now the caveat here, maybe it isn't actually a new model. Maybe Tesla can just drive the cost of that vehicle itself down so far that it becomes even more affordable toward the tail end of this decade. The other thing that most people are getting dead wrong about Tesla, including the bears and the bulls, is EV adoption rates. There are no sane-sounding people on Earth today who are getting it right when it comes to EV adoption. I believe that everyone, aside from the people who sound absolutely insane, shout out to ARK Invest, shout out to Rethink X, Tony Sieber and co. It's only the few people who sound absolutely insane who are on the mark. I've discussed this in detail before. The economics make this an inevitability. Within just a few years, consumers who do not have rocks in their heads will not be buying ICE vehicles. There are still consumers who have rocks in their heads, don't get me wrong. The point I'm making here is EV adoption will happen a lot faster than anyone is predicting, aside from a few rare exceptions. Everyone's assumptions about Tesla's percentage market share, average selling prices, completely off the mark. This is happening faster than just about anyone thinks. It's been happening faster than just about anyone thinks. The expert forecasts have been wrong to the downside by embarrassingly large margins, and nothing's changed. As I've mentioned in recent videos, just a few years ago, Moron Stanley thought Tesla would sell, give or take, around 4 million electric vehicles in 2030, then 5. Now it's somewhere around 6. Why would that be? Well, let's think here. Laura and Stanley are massively underestimating the size of the global EV market. They're overestimating Tesla's average selling prices. They're underestimating how much Tesla can reduce costs, and they will pass those cost savings on. Why? Because they can. So it's a very long way of saying, don't say I didn't warn you. Oh, and speaking of warnings, warning, if you don't feel your best, you probably won't perform your best. Makes sense, right? That's why I drink Athletic Greens AG1 every day. Been doing so now for almost 2 years. In fact, it might be 2 years now. Losing count. All I know is I've been feeling a lot fucking better for a couple of years. And it's no coincidence. I know this is an extremely controversial opinion, but if you don't give your body everything it needs to optimally function, not to survive, but to thrive, you probably won't feel as good and you probably won't be as good as you could. Athletic Greens AG1 is a great way to fill in nutritional gaps. I mean, check this stuff out. Look at the ingredients list on this, guys. Everything you can possibly imagine, right? We've got vitamin A, vitamin C, vitamin E, thiamine, riboflavin, niacin, vitamin B6, folate, B12, biotin, pantothenic acid, calcium, phosphorus, magnesium, zinc, selenium, copper, manganese, chromium, sodium, potassium. Look at all the other stuff in here as well. I could go on and on and on. I can guarantee you, you are not getting everything that's in Athletic Greens AG1 through your diet. It's just not possible. It's 2023. We know a lot about human physiology and biology, and we know that the body needs certain things for optimal performance. Again, if you're happy with just getting by and just making do, this is not for you. But if you really want to get the most out of life, giving your body everything it needs to feel and perform your best is a non-negotiable. Now, I've got to be honest with you guys. I'll never understand people who are satisfied with average. I can't understand. I just can't empathize. I know there are people like that. I'm just not one of them, and I can't even put myself in the mindset of somebody who's like, yeah, well, I'll just get by. It's just pay my lousy bills and no. I just can't. It's not in my DNA. And if you can relate, I implore you, try Athletic Greens AG1. There's a 90-day money-back guarantee. Athletic Greens AG1 is an excellent way to fill in nutritional gaps, which we all have. It features 75 high-quality vitamins, minerals, and whole food source nutrients. I just had a look at a bunch of them right here. Plus, prebiotics and probiotics and digestive enzymes and adaptogens to help you deal with stress. If you head to athleticgreens.com/SMR or use the link at the pinned comment, you get a 1-year free supply of vitamin D3 and K2, and you'll be well on your way to feeling and performing your best. If you're somebody who's always looking to gain an edge, this is an absolute no-brainer. Here's what some viewers of the channel have to say. I noticed 3 things with AG1. Chronic heartburn is gone, my digestion is more regular, I'm more alert, and I wake up with a raging heart on every morning. Make the most of it. My mental game has improved greatly with AG1. Didn't expect this, but man, I really needed it. AG1's been an absolute game changer in my life. 3 months in, I continue to have more energy, especially in the mornings, and to hit it harder at workouts. Plus, continue to have mental sharpness, feel more driven to succeed in both my business growth as well as my personal life goals. And this has snowballed into a new sense of peace, lower anxiety, and a refocus on priorities in life, family, friends, and better work-life balance. I never feel overwhelmed with anything. From a female viewer, AG1 is for the ladies. I've been drinking it now for 2 months. My cycle used to be awful, no more. Headaches, nausea, and cramps are history. Fatigue is a thing of the past. And fellas, if she's ever in the mood, get her some AG1. I definitely don't understand what she means here. It's got nothing to do with an increase in her libido, obviously. Moving on, another one. This user on day 8 of Athletic Greens. A few key highlights here: decreased anxiety, overflowing energy. P.S. I think they put crack in this stuff. Another one. AG1 has relieved my gut issues so that my IBS is far more manageable. It's cleared my skin, it's elevated my mood, not to mention my cognitive abilities at work. I'm running rings around my colleagues in terms of motivation and drive, and I'm only on my 2nd month. I'm going to keep going. Chipping away at some of those skeptics. Come on, bro, it can't be that good, can it? What are all these testimonials? Who keeps writing these? You must be fake. Another. AG1 has given me a lot more energy. I hope you're finding productive ways to use it, my friend. Just received my 2nd pouch of AG1 and I find improvement in short-term memory and not napping during the day as I did pre-AG1. And one more. Day 30 of AG1 and I cannot explain to you how much better I'm feeling. My social anxiety is so much better. I did not expect this to help so much, but it has. I feel energized, ready to do things. I've been staying on top of things for the first time in years. If you haven't tried it already, really truly try it. I was a skeptic. I did not at all believe it was going to help, and it has significantly. Now, believe it or not, these are the rule, not the exceptions to the rule. Day after day, more testimonials continue to roll in. People are trying Athletic Greens AG1, and almost everybody feels positive effects, whether it's mood, cognition, sleep, energy, reduction in anxiety. For some strange reason, it almost seems that if you give your body everything it needs to feel and perform its best, it'll feel and perform its best. What a crazy idea. For me personally, the biggest effect by far I've experienced from Athletic Greens AG1 is a massive increase and sustained boost in energy. Before I started taking Athletic Greens AG1, I was getting tired every afternoon. I was hitting a wall around 3 or 4 p.m. I felt so tired I just wanted to take a nap. I didn't, but I felt like I needed to. Thank f***. But that is now a thing of the past. The biggest issue I have now every day is finding ways to use all of my energy. And I'm not kidding. Look at my productivity over the last couple of years since I started taking Athletic Greens AG1. The length of my videos, my output on Patreon, the other things I'm up to as well. So what are you waiting for? Head to athleticgreens.com/SMR or use the link in the pinned comment. Start your daily health habit now and let me know how you're feeling in a few weeks' time. I actually post a lot more on Patreon regarding health, nutrition, optimizing energy, hormones, whole kit and caboodle. I'm very serious about this stuff. My long-term Patreon viewers will know these topics come up very, very regularly. So if you're interested in optimizing your health, wellness, energy, and vitality, plenty more content over on Patreon. You can join with the card in the corner or the link in the pinned comment. See you over there. Love ya.